Did you know that 1 in every 4 US adults under the age of 40 has student loans? So you came across this video or you're watching me right now because you're seriously considering going to grad school or college, and at some point in that process you will think about taking student loans. So in today's video, I'll share with you all you need to know about student loans before you make that big decision. So in this video, we'll talk about who is eligible for student loans, the options that are available to you, how student loans really work, and we'll end with the key terms that you need to know before you make that decision to take or not take student loans. Before we jump into the 4 sections I just mentioned, I want you to know 2 important things. One is, please make sure you check your eligibility for a specific student loan before you apply, because as an international student especially, there are only a few options available, and those student loan options that you have only support students or applicants applying to specific schools. So it's so important that you check that the school you're interested in qualifies for student loans with a specific loan provider. That's one. 2 is, you need to know that there are 2 main types of student loans here, or categories. There's the private student loans and also the government or government-backed or assisted type loans. The focus of this video is the private loans. That's private loans you get from private institutions, not the government. Please check the different websites in your home country to see if there's some government type assistance for you if you're considering taking student loans to study abroad or to just even study in your home country. So let's talk about eligibility for student loans. Know that these eligibility criteria varies depending on the student loan provider that you're considering. So a couple of things may be different, but generally these are the few criteria that almost all of them have. First, you must have an admission offer from an eligible school. As I mentioned earlier, some schools are just not eligible for that specific loan provider. So you must have an admission offer from an eligible school for that current period. That's one. The other thing is, typically you must be 18 years or above. So depending on the loan provider, that could be 21 years, but generally 18 years. So that means if you're less than 18 and going to college, you may need a co-signer or your parents or your guardian to sign off on that loan. So that's the second thing that you need to know. The third one is, you must be a citizen of a specific country. So some loan providers only support applicants that are from specific countries. Say if the loan provider is based in the US, generally they want you to be a US citizen or permanent resident. But there are a few loan providers that work with international students. So if you're not considering those specific options that work with international students, then typically you need to be a citizen of that country you're applying to. And then the last one is that your admission offer must be for that current academic year. So what does this mean? If your admission offer is for next year, you cannot take student loans this year. If your admission offer was for last year, you cannot use that same admission offer to apply for student loans this year. So you need to go back to the school, reapply, or ask for a new admission offer. So those are the main eligibility criteria for a lot of these loan providers. Again, as I mentioned earlier, there could be a few more things that each loan provider adds to their list of the criteria in order for you to be eligible. So how do student loans work? Let's talk about process. Now for this, I think about the process in 4 stages or phases. Phase 1 is application, phase 2 is decision, phase 3 is disbursement, phase 4 is repayment. That's the interesting part, right? So these are the 4 phases. Now let's jump into phase 1. You know, I took student loans, if you've been on this channel over the last 5 years, almost 5 years. You know, I took student loans to go to grad school to do an MBA. So a lot of what I'll be sharing is from my experience and from a lot of clients and students that I've supported over the last 5 years thereabouts. So pay attention to this part of the video. Phase 1, the first step is for you to check the loan provider's website and check their eligibility criteria. You know, I just talked about eligibility for loans generally, but each loan provider has their own list of eligibility type criteria. So step number 1 is check their website to know if you are eligible or not. I get a lot of comments from you, my friends, where you say, Doyin, I have this admission offer, but I just tried applying for student loans and I keep getting this notification that I do not qualify. That's because the loan provider doesn't work with the school from which you have admission offer. So step 1 here, go to that loan provider's website and check the eligibility criteria and make sure you are eligible for the loans. That's step 1. And then step 2 is for you to prepare the documents that you need. Typically, they need some sort of government ID. They need to see your admission offer. Many of them want to see your employment history if you're applying to like grad school. Even some may ask for some proof for your first degree if you already have a first degree and you're applying to grad school. So just prepare all the documents that you need. They could ask for a transcript as well. So that's step 2 within phase 1. We're still in phase 1, okay? So this is step 2. Prepare all the documents that you need so that once you are trying to apply, you just upload everything and there's no delay. Step 3 is the most important part of this process: submit an application. Now, I get a lot of comments where my friends here on YouTube say, I'm not sure if I'll take the loans. I don't know if just apply. Submit the application. You do not even need to say, yes, I want the cash until much later in the process. So if you are still like dilly-dallying about taking student loans, my recommendation is apply and make that decision whether you want to take the loans for real later. That decision is much later. It's after, likely closer to when school resumes or when your school resumes. So you can make that decision later. So the step 3 here is for you to submit the application and attach the documents. Now, I do have a couple of tips that I've written down here for you because I care about you. So I always have tips. So for the submission, I have a couple of tips. One is, please apply to multiple loan providers, especially if you're an international student. Once you check the eligibility criteria for different loan providers, please, if you qualify, apply to more than one for sure, because submitting an application doesn't mean that your loan will be approved. So please spread your wings a bit. Don't be loyal to one loan provider. Spread your wings, okay? Apply to more than one. If you qualify for 2 or 3 of them, please go ahead and apply so that you can compare the rates, so that you can compare the terms when you get to that point. And we'll talk a bit about that later in today's video. Second tip I have on this submission is think about risk. Now, I get a lot of comments from you, my friends, where you tell me, Doyin, I keep getting rejected. And the big reason is risk. The loan providers you're applying to think you're too risky for them. At the end of the day, this loan business is all about managing risk. If someone thinks, okay, the reward or the likelihood that you would repay these loans on time is much higher than the risk that you wouldn't, they would approve your student loan application. They will approve the application. But just think about risk. When you're putting in your documents and they're asking you questions about like how much loans you need, think about this amount I'm about to submit to them. How risky does it make me become? Essentially, taking $100K, giving you a $100,000 loan is a lot riskier than giving you a $20,000 loan. So all of this to say, if you have other options, if you have other things that could support you through grad school, please explore them so that you minimize your risk when you're applying for student loans. So loan amount is one example. There's another example about like experience. Of course, it's a lot riskier for you to give out loans to someone that has 0 work experience versus someone that has 6 years high quality work experience. So these are just tiny things that you should know about. I have a ton of videos about things for you to know before you reapply for a student loan, especially after you've been rejected. So I will link some of those videos in the description, but just know that risk is the most important thing you need to think about when you're filling your application. How risky am I to this loan provider? The final step here in phase 1 is the decision. You will hear from the school, from the loan provider, if they will get back to you and tell you if you're whether or not you're approved or conditionally approved, or your loan has been denied. And this is the final step of the process, so of the phase 1 of the process. Now let's move on to phase 2 of the process, and phase 2 is the review and decision phase of the process. So now at this point, you have submitted your application and you've heard back from the loan provider that your application has been approved. Great. If your application wasn't approved, sadly you do not get to move to phase 2, so this won't be relevant if your application wasn't approved. But hopefully by the time you're applying, after watching this video and the videos I will put in the description, my friend, your loan application will be approved. Let somebody in the comments shout amen. Okay, so phase 2 is that now you've heard back and your loan was approved. This is where they share, of course, it could also be that your loan was conditionally approved, and then they'll say submit some more documents and then they approve. That's it. Now step 1 here is the loan provider will share terms with you. Usually for the recent ones I've seen, 1 or 2 pages, just summary of the terms. This is your interest rate, this is the loan amount, this is what you need to repay, things like that. So they will share that document with you if your loan is approved, and now it's your job, my friend, to review that document well. I will talk much later in today's video or the next one as part of this series. I will share with you the most important terms for you to know on a loan approval letter, the most important things that you should know. I'll share that in this video, maybe later or the next one, so watch out for that one. But just know that your job when they send you that document is to review like your life depends on it, because these days your life depends on those numbers. The rates are so crazy, so please review those documents well. So that's step 1 in this phase 2 part of the process. And then the next step here is for you to sign those documents virtually. A lot of them will allow you just sign virtually with like brands like DocuSign or any HelloSign or anyone they use, so you can sign that loan virtually. And then the last step here is, at some point many of those loan providers would want to meet with you in person at your school. So what that means is, even though you've signed the loan offer and everything is good, you don't get the cash. They still want you to sign in person when you start when you resume school. So this is just something for you to note, that there's, for many of them that I've seen, there's that final step of like you signing those loan documents in person physically with one of their representatives. So that may be different now, but that's definitely how it worked for me 6.5 years ago, which feels like a long time. Okay, so that's that. Now let's move on to phase 3 of this loan process. Phase 2 is essentially you've received a loan offer from the loan provider, you've reviewed, and now you've signed. Let's move on to phase 3. Phase 3 is disbursement. This is where you see all the dollars we've been talking about. So far, all those loan amounts and dollars and or pounds have been on paper. Now the real money is going to move around a bit. So phase 3 is disbursement, and this is a phase so many people do not understand, because they've never taken student loans, especially for international students. This is kind of like their first time. This was my first time taking any kind of loans, really. When I was applying 7 years ago, I think that's when I applied to all these loan providers. So let's talk about disbursement, which is phase 3. Step 1 here is fund request. At the beginning of the semester, after you've signed all those documentation and everything is good, everything we talked about in phase 2, at the beginning of the semester, the loan provider will email you saying, this is what we want to send to your school for this semester. Give a thumbs up, or like go on their link and approve, like yes, make a formal request for it. Usually just one click of a button or something like that. No real work here. They just want to confirm. So your job is confirming. So at the beginning of the semester, they reach out to you saying, hey, we want to send $20,000 of this $100,000 you borrowed. We want to send $20,000 to the school. And then you will confirm. And at that point, they will send the dollars to the school. And so depending on your loan provider, this process may be different. Maybe for your loan provider, the process is they don't need to check with you every semester since you've agreed on those terms before now. But for many of them, they will check every semester for you to confirm in case things have changed. And I found that very valuable because it gave me some flexibility, because at some point for some semesters, maybe I've worked for a bit, maybe I don't need that much anymore. I'll just tell them, you know, send this $10,000 instead of $15,000, that kind of thing. Okay, so that's the first step there. And then the next step is they disperse to the school, and then the school will reimburse you. So that's the next thing. After the loan provider confirms with you, that's step one here. The step two is the loan provider sends the dollars or the amounts to the school. Now, the loan provider doesn't send you anything. Your school, they send it to your school, and then your school can reimburse you. I'm going to use an example here, which was what I always did. Let's say for that semester you requested $20,000, but your total tuition and fees for that semester was $15,000. Excuse me. The loan provider will not send 15 to the school and 5 to you. No. The loan provider sends the entire $20,000 to your school. Then your school takes out their $15,000, and then they send you $5,000 for your rent or whatever you wanted to use that $5,000 for. So a couple of things to note on this last step in this phase is interest accrues on the full amount that was disbursed. I get so many questions on this one. Please know that if they've disbursed $20,000 this semester, $25,000 the previous semester, that's $45,000. You will pay interest on the entire $45,000, not on what the school took versus what you got as a reimbursement. No, you borrowed $45K, you will pay interest on $45K. However way that's split, you will pay interest on what you have borrowed. And then with each additional disbursement, your principal balance increases. So before you borrowed $25,000 last semester, that's your principal, right? Interest is on that $25,000. This semester now, they are sending $20,000 to your school. Now your principal is $45,000. You will now pay interest on the $45,000. Of course, I am making the assumption that you've not repaid any amount. If you've not repaid any amount, as your principal increases, your interest will be on the increased amount, not on the initial amount, because I get some of these questions. Okay, so that's the last step in this phase. It's essentially the loan provider asks you to confirm at the beginning of each semester. Loan provider sends the dollars to your school. Your school takes out their tuition and fees or whatever you're owing the school, and then reimburse you, the balance amount that you can use for your living expenses. That's the summary of phase 3. Now let's get to phase 4. Let's talk about phase 4, and phase 4 is repayment. Probably the hardest part of this. You think taking loans and all this process and getting rejected every time is hard? Try paying back loans. Try paying back student loans when you may not have gotten a job yet, and those interest rates are crazy. It's tough. This is the hardest phase, but I just want to encourage you, my friend, that you've gone through hard stuff. You've gone through really tough things, and you can handle this too. Just make sure you're doing your calculation right. You're taking some calculated risk. I took $100,000 and I was able to pay back, and sometimes I still cannot believe that I was able to pay back $100,000. When I was taking these loans 6.5 years ago, I was scared. Like, I don't have a better word. I was anxious. I was worried. Like, every breathing moment, I was thinking about those student loans. What happens if I don't get a good job? What happens if I have to do this? What happens? But you'll be fine. I'm telling you, you will be fine. Yes, think about it very well before you make this decision. And I'm hoping my videos help you feel comfortable that you're making the right decision. But I just want to share everything with you so you can evaluate the options that you have. But if you determine you've done all your research, you've calculated well, and this is the right decision for you to take student loans, it will be tough to pay back, but I think you will be able to handle it. Okay, so let's talk about repayment. First thing I want to talk about here is grace period, which a lot of people somehow find confusing. So what is grace period? Grace period is essentially the loan provider giving you some grace. Just the same way the Bible talks about grace. If you're Christian, the loan provider is giving you some grace to say, you have some time between when you graduate and when you start paying us. So let's say you've taken loans for a 2-year program and you're done with that program. Now you've graduated. Some loan provider will give you a 6-month grace period. Essentially what they're saying is, you graduated today, October 2024, we're going to give you 6 more months where you do not have to pay us for those 6 months. You are not in violation of anything if you don't pay us anything within these 6 months. You can figure yourself out, try to get a job, try to get your own footing, but at the end of the 6 months, now you have to keep paying. Otherwise, you're violating the contract. They could report you to whatever collection agencies or whatever. Now, that's what grace period means. The biggest question I've gotten on this channel about grace period is, hey Doing, does that mean during the 6-month grace period, I do not owe any interest? I wish, my friend, but the answer is no. You owe interest. What grace period means is you do not need to pay back yet, but if you like, wait till the end of that 6 months before you start repaying. You accrue interest every day. So it's not an interest-free grace period. No, it's purely just grace period for you to get yourself together before you start paying. That's all it is. I hope that clarifies, because I get a lot of questions about this one. Another thing I want to mention about repayment is you can begin to repay your loans, make some payments while in school before graduation. Now, for this one, please check your loan agreement to see if there are any penalties for early payments. It's not common these days, but just check that loan agreement well. For some loan providers, for many loan providers, they do not penalize you for paying early. Let's say you're still in school, you're in your 2nd year, but you've done some work on campus and stuff. Now you have some cash, amen, you have some dollars, you have some money, you can start repaying your loans. They do not penalize you. But for some, that early payment is kind of like messing with their plans a bit, because that means you will not pay interest on that amount you're repaying, right? So they may penalize you, but just check your loan agreement. The other thing is, for most loans, when you make a payment, it's applied towards your interest first before your principal. But I don't want to confuse you. Just know that loan providers will take their interest before they apply whatever amount you paid to your principal. I'll leave it at that. If anybody has questions on that, we can go into more detail in a future video. There are also, last thing I want to mention here is there are some incentives for you to set up auto pay. So maybe you've started working or whatever and you want to start paying your loans, many loan providers give you some incentives, say 1 point or 0 point something of your interest if you set up auto pay. Auto pay is essentially you set up with your bank accounts that they automatically receive their loan payments every month. If you just watch out for those tiny incentives on your loan agreement, and those could make a ton of difference. 1% on a huge loan is significant, so you want to make sure you're checking that. Also, last thing I want to check here, I want to share here is, as you're thinking about recruiting and getting jobs, also pay attention to some companies, depending on the country you're at, maybe the UK, the US, Canada, Australia. Some of the companies you're considering offer incentives to employees that have student loans. Please ask your HR once you get into those companies, or as part of the interview process or at the end of the interview, ask if they have incentives for employees with student loans. So some of these big tech companies, for instance, have some good amounts that they just offer to you to go sort out part of your loans. So look out for those as well. Now, last thing, because I know I've mentioned last thing 5 times in this video, but last thing is consider refinancing. Yeah. So refinancing is essentially a way for you to reduce your loan, your interest rates. I will not go into detail on that today. But if you're at the point where you've graduated, you're working, and you're considering refinancing your loan to reduce your interest rate, put a comment below. Maybe, if I feel good, I'll share a video on that one, or I'll email you. Hi my friend, hope you found today's video helpful so far. See, today's video is part of a series of videos that I'm doing to help you navigate the entire application, funding, visa process. So all these videos over the next few weeks will just be added to a single playlist, and that playlist will be in my description. If you click that playlist, you will find all these videos and you will be able to navigate the entire application process by yourself. So if you have any friend that you know is applying to schools in the US, the UK, Canada, Australia this year, and they cannot afford to have an admissions coach, please send them this single link so they can navigate the entire process as well. Be nice to them. So there's still a lot to cover on student loans, and I hope you stick around and look out for the next video where I would be going even deeper into student loans and things you need to know. I hope you found the video helpful. If you did, please consider giving it a thumbs up and subscribe. Don't be a stranger, be a part of the family. So subscribe to the channel, and I'll see you in my next video.